Welcome back. So like we've been telling you, there is some caution across Asian markets. It's not like a broad sea of green, but the Hang Seng has its own mood in mind, and that's been an outperforming market all through the last 1 month, including this morning. So the Hong Kong Hang Seng is doing really well, but the other markets are a little more cautious, 2% up now. Look at that. I mean, really attracting attention there. Let's get the implied open up on the screen to see how we could perhaps do 86 points higher. So that's the indication. What about individual stocks? Lots of names in focus as always, and we have a research team standing by with the list of top stocks to watch. Hi guys, happy Friday to all of you. Let's start first with the tail-ender earnings. Nigel, how's Hindalco?
Well, Hindalco's numbers, I would say it's good. We already have Novelis's numbers, which is bulk of their profitability, and that was weak, but that was on expected lines. And that's what we have seen in the last 1 month or so, actually. Hindalco has been in consolidation mode, though, in fact, the markets have been rather jittery. Focusing on the numbers, we look at the total EBITDA, which is the India business, aluminium, alumina, as well as copper. The absolute number is bang in line with what we are working with. The aluminium EBITDA was a little bit lower, very little bit, slightly lower. But that's because of a one-time provision with regard to electricity duty. The numbers actually look good for the aluminium business. If you look at it on a year-on-year basis, the EBITDA per ton for the upstream business is now clocking $1,480 per ton. That's telling you the kind of cost savings that they're doing, the better product mix as well, and they've got the benefit of higher LME prices. Even on the downstream operations, it's stabilized at around $180 per ton. Both these numbers may not be sustainable, but it's much better on a year-on-year basis. Moving to the copper business, the management has been guiding that the copper EBITDA will cool down, from that 800 crores odd that we saw in the previous quarter. This time as well, it's closer to around 750 plus crores, so that as well is good. And the net debt number, because of the big capex in Novelis, on expected lines, that's moved up a little bit. I'll say these numbers are good and should get a thumbs up in today's trading session. Moving to Sudarshan. Sudarshan, tell us about ITC Hotels. It appears there's going to be a bit of an overhang on the stock. Tell us more.
Good morning, Nigel. So BAT, that is British American Tobacco Company, had earnings call for 2024 yesterday. It has made a statement regarding its stake in ITC Hotels. As of December 2024, its holding in ITC Hotels is around 15.3%. Now, company says it has no interest to become a long-term shareholder of a hotel chain in India. And that is the reason that it's looking to sell its entire 15.3 stake in ITC Hotels, and the timeline that company has mentioned that by 2026, it's looking to sell the stake. Now, apart from BAT, another Sooty also holds around 4.7% stake as of December 2024. So we'll have to see if there will be obviously there will be an overhang regarding the holding of both Sooty and BAT, and we'll see how this goes ahead in the next 1 or 2 years. But for now, I'm going with red for ITC Hotels.
All right, so thank you very much for that. Well, let's focus on Manappuram Finance next. And Abhishek is here to tell us more. Abhishek, good morning.
Good morning, Prashant. So, if you take a look at Manappuram, the gold portfolio has been on the weaker side compared to what strong numbers that you saw for Muthoot Finance on the gold portfolio. So, gold tonnage for them is at 57.3 tons, which is down by 1.5% YOY and about 4% quarter-on-quarter. So, in tonnage-wise, this is the lowest tonnage that you are seeing in last 32 quarters or even more. MFI AUM, that's also declined massively by 14.5% YOY and about 16.7% sequentially. However, the non-gold AUM share, that's been on a declining trend. So that is now down to 44.6% versus 48.6% in the same quarter last year and about 46.7% in the previous quarter. Impacted the result is the provisions. Provisions increased by 270.7% YOY and about 113% quarter-on-quarter. Calculation does shows that the net interest margin has declined both YOY and quarter-on-quarter. So PNL with reference to Motilal Oswal, NII estimate is in line with Motilal Oswal estimate. However, PAT is significantly lower than Motilal Oswal, estimate. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, Vinny joins us. She's going to lighten the mood a little bit with United Breweries. How are those numbers, Vinny?
Doesn't seem like that great a set of numbers, though the company has managed to see a double-digit revenue growth this time, especially the seasonally weak quarter is what the highlight is coming in. But overall, the numbers were missing the street estimate. Lower EBITDA mainly impacted by the marginal dip that one saw in the gross margins. Investment in supply chain is something that they have done as well. So that is impacting the EBITDA performance. Profits also impacted by exceptional loss, lower other income as well as higher depreciation. Numbers, when you look at it, we're seeing an increase in terms of revenue of around 10%, but profits have seen a decline of 55% and margins coming in at 7.1% versus 8% last year. So a bit of an impact in terms of the margins is what we're seeing coming in. Volume growth, that is coming at 8%, and the premiums volumes are up 33%. They've gained market share in this quarter. Keep an eye out on that. Overall, we'll watch out for triggers. There's going to be price hikes in Telangana as well as likely new excise policy, something that we're watching out for. As of now, expecting a bit of a red coming in on the screen.
Okay, we'll have to work
Nigel's
harder.
not happy.
We'll have to work harder. Vinny, thanks a lot for joining in and telling us about United Breweries. And Upasana, I don't know whether you're going to be helping out with that, but tell us about Deepak Nitrite for now.
Good morning, Nigel. Well, the company's reported a weak set of numbers. It's a clear miss across the board. Revenue, EBITDA margin, PAT, all three below the street estimates. Now, this weak performance is mainly contributed by companies, both the segments, that is advanced, intermediate and phenolics, and the margins of these, both the segments, fell to the lowest levels. Now, coming to the numbers first, revenue stood around 1900 crore with a downtick of 5% on a one-year basis. EBITDA stood at 160 crore with a downtick of 45%, and margins were down about 630 basis points at 8.9%. Company's PAT also saw a downtick of 51% on a one-year basis. Now, coming to the key segments of the company, that is advanced intermediates, the revenue saw a downtick of 8% on a one-year basis, and margins contracted nearly about 1080 bips at 3.1%. Coming to phenolics, the revenue saw flat growth and margins were under pressure, down about 440 basis points on a one-year basis. Now, margins were impacted due to higher input prices, plant shutdown, which resulted in unusual import quantities, is what the company has indicated. Company has also said that this is the first time both the segments are going through short-term challenges together. So all in all, weak set of numbers. I expect the stock to open in red today.
Okay, all right, got it. Upasana, thanks very much. So Deepak Nitrite, maybe some red there as well. Let's hop across to Vivek and see if he has any potential greens for us. Vivek, over to you.
Well, some potential greens. Most of the EPC companies, most of the construction companies actually faced a very tough H1 on the back of muted execution. Kalpataru Projects was no exception. They've started off H2 on a much stronger note, but despite that, they've left themselves with a steep implied ask rate as far as Q4 is concerned to meet the stated guidance. Revenues higher by almost 17%, EBITDA higher by 13.3%, margins to at 8.4 versus 8.6%. That is something that we'll need more clarity on. Profitably muted, higher just around 1%, but it was impacted by a higher effective tax rate as well as higher finance costs. What's very good for the company, the order book continues to remain very strong in excess of 61,400 crore. L1 position 2 quite steady at 250 crore. The YTD order wins have come in very steady at over 20,000 crore. The other stock on the radar is again a large infra company, Afcons Infra. Revenues higher by 2.7%, EBITDA slightly muted, down 2.7%. Margins at 11.35% versus 11.98%. Again, some moderation seen as far as EBITDA margins are concerned. Profitability higher by 35%, but largely aided by much stronger other income, which came in at 120 crore versus just around 56 crore last time around. Going with the green on the back of the fact that the order book position is very strong, over 38,000 crore, and the L1 position that the company currently standing at is in excess of 10,600 crore. So L1 as well as order book very strong. Going with the green with both of these names.
Okay, all right, got it, Vivek. Thanks very much for that. Going back to Vinny now. Vinny, you're watching out for a bunch of other mid-cap stocks. Tell us the list.
Absolutely. So two stocks, Titagarh as well as Senco Gold, both on the back of their numbers. Now, Titagarh Rail, weak set of numbers was reported by the company. The profits are down by 16%. Revenue seeing a decline of around 5.5%, and margin seeing a contraction of 50 basis points. 11.1% is what the EBITDA margin is at. Now, what is impacting it? We are seeing a bit of higher expenses, other expenses as well as employee costs. Other expenses are up by 14% on a year-on-year basis, and employee cost is also seeing an increase of 45%. So impacting the bottom line as well as in terms of the margins and operational performance of the company. Now, when you're looking at revenue, what has actually seen that impact is because the freight segment, freight railway segment, that has seen a bit of a muted performance in terms of revenues. The sales of wagons of 2 Indian railways were impacted this time by inadequate supply of wheel sets, and that is what is impacting the overall revenue over there. And passenger rail segment is also seeing a decline in terms of 51% in terms of revenue, just at 49 crores. So that is why a red coming in on the screen for Titagarh Rail. Senco Gold also, we are expecting red this time on the screen. Revenue saw a growth of 27%, but margins, profits of the company, that is seeing a decline. This time there's a higher material cost that has come in, and that is leading to the miss on the operational front for the company. SSSG growth is at 13-14%, rain studded ratio is at 10.5%. But yes, higher material cost is the main factor, and that is likely due to some custom duty adjustments that are there. So that is what one is watching out for in terms of clarity from the management. But as of now, Senco Gold is also missing the street estimate.
All right, Vinny, thank you very much for that. So we'll have, by the way, the management of Senco join us a little later. Bank of Baroda is the next one we want to address. Abhishek is here. Abhishek, back to you.
Well, Prashant, every year, lenders do take board approval for fundraise. So this time, Bank of Baroda has taken a board approval to raise up to 8,500 crore of capital. Now, capital raise will be done via QIP or other modes. Board has given extension up to FY26 for raising 4,000 crore via 81 or Tier 2 debt. Now, what happens is that you take a one-year approval. If in case you are not able to raise money, this is the time that Bank of Baroda has actually sought an extension for that board approval that was already in place in July of last year. So this is out of the 7,500 crore of capital approval that they had taken from July, that this 4,000 crore has been extended up to FY26 by the board. Back to you.
Okay, all right. Thanks for that, Abhishek. Let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow around them are Hindalco, Afcons Infra, Kalpataru Projects, and Bank of Baroda. The ones that could perhaps start negative are ITC Hotels, Manappuram Finance, United Breweries, Deepak Nitrite, Titagarh Rail, and Senco Gold. Okay, so that's equities. Now, what's the latest in the world of commodities? We have Manisha joining in with the roundup of all the overnight action as always. Manisha, I did note, no let up in the sparkle on gold, but what else? So what's making headlines for you?
Oh, especially with Valentine's Day, you could actually be looking at more demand coming into the markets as well. But, well, absolutely, gold is holding at a record highs. And what with the conversations around U.S. reciprocal tariffs, 25% already on steel and aluminum, 10% of Chinese goods as well, and so much more being discussed right now. So this uncertainty, and if this continues for a longer term, then you are looking at more safe haven buying continuing in case of gold. Also, a slight decline in U.S. dollar has been supportive for gold, but that's exactly what you are seeing in many of the metals as well. I want to talk about copper because we are trading at a June 2024 highs right now. It is there are some conversations that the 25% tariff on copper could be extended as well, and that could disrupt the global supply chain. The net long positions, if you look at in copper, are on for a 6-week highest since the month of November. The manufacturing data from China, rather US, has been positive, and stimulus measures could be coming in from China. So this is what is keeping metals also in favor. Silver is trading at a 3-month highs as well. Zinc prices are up by 1.5% right now. So strong support continuing in many of these metals, precious and base metals.
All right, Manisha, thank you very much for that. We'll take a quick commercial break here. We're going to come back. And Mitesh and Shrikant Chauhan is a Friday, so we'll have Shrikant join us with specific trading ideas. Stay tuned.